All right, I've got Tarek Morshed here with us. Tarek, welcome to the show.
Hey, thank you, Roger. Great to be here.
Man, thank you for taking the time to join us today and talk to us a little bit about what you're doing. You're in Austin, Texas, and of course, Austin is where half of America, it seems like they want to be. And as I told you in the run-up to the show, my wife and I, it's even on our list of places that we're going to look into owning a place someday. So tell us about how you wound up in Austin.
Well, long story short, I actually was ethnically from Bangladesh, but I was actually born in Libya of all places. And then we lived there till I was 12, went to American speaking schools, and then we landed in Houston when I was 12. But, coming from overseas and landing in Houston in the suburbs is a pretty different life.
Yes.
All the norms are different. I was kind of in a very suburban area and that kind of a thing. Everyone looked the same. So I, graduated high school and Houston just wasn't working for me at the time, at least in the suburbs. Visited a few schools and landed in Austin because Austin actually reminded me of a very open-minded, entrepreneurial spirit, a city that really accepts everybody. And that was in 1994. So I moved up here to go to school at UT, ended up getting my accounting degree while I was there.
Go Horns and all that, right?
Go Orange and all that, exactly.
Hey, and this is a little bit off the subject. This is a real estate show, but you guys had a great recruiting season this year.
Amazing recruiting season,
yeah.
Top 3.
Yeah, now, we're not going to get off on this too much. I am a fan of Charlie Strong. I've liked him for a long time, but yes. I like the coach you got now. He's done a great job everywhere he's been.
Yeah, he has. And I'll say this, I don't think Charlie ever got a fair shake here.
Yeah. That's probably as far as we need to go about that on a real estate show. But all right, so now you went to Texas. Did you study real estate when you were in school?
Well, I always tell people that was actually my real education. So I went to UT to get my accounting degree. I grew up in a CPA household. I actually loved numbers and analysis, but I knew I wasn't going to do that for my career. I just didn't know what else I was going to do. So while I was getting my degree, one of my roommates comes down one day with a real estate book, and it was Robert Allen, Zero Money Down Investing. All right.
Yeah.
So this is aging me here.
No, that's all right. We all know the book.
But, it was interesting as a 20, 21-year-old at the time, or 18, whatever I was, I really liked the concepts. And that really got me intrigued. And I thought, wow, real estate seems very interesting. So we started taking courses outside of school and just learning as much as we could. Went to Robert Allen's seminar in San Diego and all these different things. And then ultimately we said, all right, it's time to go buy a house.
Yeah.
And we scraped it together, bought a HUD foreclosure. We were, in school, didn't have any idea what we were doing. And we dropped out for a semester just to save up the money for a down payment. And that's kind of what got things started. And I just fell in love with real estate. So I spent the rest of my 3 years at UT spending every waking minute I could learn about real estate, how the economy ties into real estate in Austin, and where Austin is going in real estate. So again, that really ended up being my true education, I tell people.
Good. I can't tell you how much I respect that you just went out there and took action, because we talked about this on the last show with my last guest. So many people spend their time thinking about this, reading about it, going to meetings about it, and never actually making an offer or buying a house. And friends, listen, here's Tarek again, affirming you just got to get out there and buy your first house. When you were at the closing table, of course, you were closing with, do you use attorneys or title companies in Texas? Title companies?
Title companies, yes.
Okay. When you were there, were you feeling some nerves?
I was freaked out. I'm a sophomore in college. I dropped out of school for a semester just to work doubles to save up enough money to buy this quote unquote investment property that was a foreclosure with a cracked slab.
Oh my goodness. Yeah.
Right? I was taking all the risks. We had zero money to do the fix-ups beyond, but we were like, you know what? It's so low. This is 1994. We were buying this for 65 grand. We were like, we'll scrape together that monthly payment somehow. We got to figure it out, because we'd taken enough courses and classes and read enough books there was nothing else to do but go take the risk, you know?
So how
So
did
yeah.
you come up with the money to fix the house?
Say again?
How did you come up with enough money to fix the house?
You know, we scraped it. We didn't have enough money to go hire contractors. So we became the contractors, and we bought the materials and learned as we went. And it was complete bootstrapping in every sense of the word.
I love it.
And you just had to go do it. And it was the best thing I could have ever done for myself, to put my butt on the line and risk it that way, and learn everything you have to learn, and have the gumption to go figure it out, because you have no other choice.
Yeah. The way I got my skills, I had a house with an unfinished basement. I decided one day, I'm going to finish the basement. I'm going to build myself a man cave. And my wife said, what do you know about it? Well, I got a hammer. I know how to swing it. I would go down to the local building supply store and get the guy to teach me how to do what the next step was.
Nice.
Yes, I reframed a couple of walls because I couldn't get them square. But
wow.
in time, before it was over with, I had accumulated tools, and I'd gone to a cabinet shop and had the guy teach me how to build a bathroom vanity. I learned how to do it. And I love your approach, because that's how you really learn. Just jump in and do it. Don't wait till you know everything, right?
No, you have to learn as you go. You can read and be taught, but the real learning, and the real long-term success, if you're going to have it, is going to come from taking those risks. There's just no other way.
Now, my guess is all these years later, you don't jump in there and do your wiring and carpentry work yourself anymore. Am I right?
No, you don't want me to do it anyway.
Well, yeah, it took me a few years to discover that even though I knew how, a professional could do it better and faster, and ultimately save me money. So, all right. Now, that was the beginning. You finished your degree, and then you never went into the accounting world, I'm gathering. You just went straight into real estate.
Yes, kind of following the same path we've been talking about, where, once you commit to a direction, you just have to go take the risks and be okay with what the outcome will be. So, I don't even know how I got into that program at UT, frankly. It was a top 5 program in the country, right? So you would think that if I actually got into that program somehow and then graduated, that I would have gone on some job interviews. Well, I was so impassioned about real estate from the brief experience I'd had in real estate. By the time I graduated, me and my buddy we'd done 2 to 3 homes, that I just said, you know what, this is what I'm passionate about. I'm not even going to go on a job interview. And I just said, at the same time, I've done 3 homes, and the process in real estate is pretty messed up, and no one's really guiding and no one's really educating. Yet I don't have enough money to keep going and buying houses. So what do I do? So what came up for me is, hey, I love working with people. I love making a difference for people. I love educating. And I'd really spent so much time in those 3 years learning about real estate in Austin and how the economy works, how it all ties in, learning all the neighborhoods, that I said, you know what, I'm going to go get licensed as an agent and start representing people and really bring an education approach. And then that'll allow me to keep investing.
All right, we've got to go to a break. So let's finish answering that question right when we get back.
Peter Faulkner here. I attended a one-day flip starter training session led by Roger Blankenship, and I was amazed to see what has happened in Roger's life in the last 15 or plus years, flipping over 800 houses. And in this one-day training, he told how he did it and what the pitfalls, the blessings, the benefits, and how to do it. And I was so impressed with how well organized and how smooth the training went today. If you're tempted or encouraged to go, go. It was not a bad price, and if you get a chance to do it, even just to consider investing. But I just want to thank Roger for a great day today and appreciate what he's doing. Thank you, Roger.
All right, right when we went to the break, you were talking about getting out of, or maybe not getting out of the investing, but adding to. And what were you going to do? You decided to become a licensed realtor.
Yes, because I needed a supplement income while I built my investment portfolio, hopefully. And I also needed capital. So I said, I think I can bring a lot of value to people as an agent that a lot of people aren't getting. education, analysis, numbers, et cetera, from my investing background and my accounting background. And I can keep investing. So it worked out really nice. I ended up building a client practice, which I actually still have today. And I've got my team. And I started that in 97. And I just kept investing in properties as I could. And either I was buying them myself or syndicating partners to put up some money. And so it went. It went from buying single family homes to either fix up and lease out or flip. And that went from about 1997 to about 2003. And then from 2003 to 2008, I tried my hand in development, where me and a partner, we partnered up, and we built 5 to 6 spec homes in urban neighborhoods around Austin, 5 to 6 spec homes a year. We did a few mixed use projects.
Mm-hmm.
I was also doing some small multifamily deals for myself.
If we could, let's back up a little bit, because you mentioned syndication, and that's something that we really haven't dwelt on the show. I know what it is, but we've never really explained it on this show. So take a minute and tell us how you put together a syndication deal.
In its very basic form, my true first syndication, right, was I had done somehow 2 homes. I'll just tell you the truth here. The first one, of course, you heard about. The second one, I bought a non-qualifying loan that they're not around anymore, but basically you could pay off a owner's equity and you just take over the note. You don't have to get approved for the loan or anything. You literally just take it over. Okay.
Yes. An assumable loan.
Yeah. So I paid her $8,000 off a credit card and took over her house. Right.
All right.
And then I'm out of capital and I can't do a deal. But I'd done 2 deals. So I went to my dad and said, Dad, I've done 2 deals. They've both been successful. Here's another property. You put up all the money. I'll do everything and we'll split it 50-50. Real simple, right? He was willing to do it. That went well. So then I just took that as a simple model for my next few. And I just went and found investors, people that I knew, family members, whatever, and said, hey, here's the model. You put up the money. I do all the work. It's 50-50. And syndication can be that simple, and that worked. Today's version would be very different, more complicated because of what we're doing today, but that's the simplest form right there.
Yeah, I don't know that it has to be. And I'm glad to hear you explain that, because I don't think I've ever mentioned this, but that's how I did my first 500 flips.
Ah, nice.
Yeah.
Nice. Same model.
Yes, the same model.
Cool. Very cool.
Yeah. All right. So now, you've got some syndications going on, and you're developing, and you're acting as a realtor. Do you have a favorite?
Wow, that's a great question. I don't have a favorite, but I will say this, because I love them both. I truly do. I believe that in life you have to look at what you're passionate about and what your purpose is, and make choices from there. What I'm seeing for myself is my client business now it's about me being a leader in life for the next 10 years and really impacting others in that way. So my client business, I'm going to be moving into a leadership role and really building out team to where they really deliver for our clients, with the idea that the development platform that I have is needing me more and needs more leadership. And so that's what's just going to beckon to me long-term over the next 10 years. But I love both equally.
So you're not going to be soldering any copper fittings anytime soon?
Nope. Again, I am, we're all good at some things and we're just not at others. And I can do it well, but I'm not going to do it great. But I can recognize incredible work and pay for it fairly, without a doubt.
All right. So when we come back from this next break, I want to talk to you a little bit about the market and the market locally, but also what you see going on nationally. All right. Okay. We'll be back in just a minute.
Learned a whole lot of different things that I didn't know. Learned how to flip houses, learned how to make money in real estate. I learned how to hire contractors. Not only did we get a big overview, but we got into the nitty-gritty details of really understanding how to make money in real estate. It was an education that I wish I would have given to Roger before I gave to the University of Georgia. Pretty powerful. It's actionable information. I can go out tomorrow and start making money with what I learned here today.
And we're back. I'm Roger. He's Tarek. We're talking about real estate and real estate in Austin. And we're here to teach you how to make money in real estate. Tarek is helping me today, or maybe I'm helping him. But we're going to talk about the market. You were alive and well and thriving through the historic crash of 2006 and 7. How did that impact you guys there in Austin, Texas?
We probably got impacted one of the least. And the reason why is...
That was going to be my next question.
The reason why is when we were running up between, let's say, 2003 and 2008, it was really based on economic fundamentals more than anything. And so our percentage of investors in the market were a lot lower. So there wasn't the frothiness of as much in our market of a bunch of zero down buyers who would go belly up if all of a sudden, rental units were empty. And so on, our jobs got lost. And so we just had a lot less of that. And therefore, when everything did turn down, we just had a lot less attrition in our economy, in jobs and such. And it just had people be able to hold on to their properties. So our market dipped about 10 to 12% during that time frame of 08 11. But that's not bad compared to most, most places in the country.
Oh, yeah. Yeah. I mean, one suburban county in just outside of Atlanta dipped 70%.
Wow. That's an elevation.
Yeah. And it's been difficult to recover from that. And it's not all the way back. But, the market everywhere is showing strong signs of recovery. In most places it has recovered. And I'm pretty sure Austin got that 10% back by 2012, right?
Definitely. I would say by 2012, 13. And then we've had a huge upcycle since 2011 till now. We've had about a 45 to 50% increase in values in our market.
On this show, our research team brings us, top 10, top 20 lists that are put out by the various sources. And, we'll get like 1 month, it'll be the top 20 list of places to invest or the top 10 places to live. And we'll pick some of those and feature them on the show. And Austin figures into a lot of those lists, including hottest places for real estate, fastest growing, in terms of price appreciation, those kinds of things. Yeah. And it also is one of the top places for investors to consider. And this was based on rental return rates and the quality of the schools. So with that in mind, you're a realtor and you're an investor. Are you a realtor that works with investors?
I do. Interestingly enough, if I had to tell you my client business, what's the percentage of investors to just, folks looking to buy a home or sell a home, I would actually say only about 20% of our clients are investors, maybe 25%. Right?
Okay.
Yeah.
But you do work with investors.
Yep.
So describe what you do with and for investors.
Number one, I'm very realistic as to where are you in the cycle. And I believe that, where the problem I personally have with a lot of my fellow realtors is very few are following the trends on where we are in the cycle and where the supply numbers are and the inventory numbers, such that you can really advise an investor as to, hey, it looks like we've got a great 2-year run up ahead of us. Or, hey, we're starting to get late in the cycle. And so, depending on your strategy, we just need to be aware of that. I think that's the one thing that we do right up front that I believe is different and very helpful.
Oh, yeah, I could tell you that it is. I'm sitting here. I think I'm talking to my first realtor who pays attention to those numbers.
You know what? I get that a lot, actually. And I don't mean that as a brag, but it's my accounting nerd side coming out. Right?
Which I appreciate.
Yeah. But I do believe if you're investing, whether I'm representing you or I've never met you as an investor, just as a piece of advice, whatever market you're in and whatever realtor you're working with, or even if you're not, go find out that data. and it's available. You have to kind of dig for it, but you can get it from title companies. They
Yep.
usually have that kind of data, and you really need to be aware of where you're at in the cycle.
Yeah. And, some states do their closings with real estate attorneys. So that information might not be as easily accessible in those states. But all right. So let me just throw this out there. Let's say we've got an investor over here who has $3 million, and they think they want to deploy that money in Austin, Texas, and the surrounding area.
Yep.
And they want to put it into properties that they can basically turn over in the next year or so for a nice tidy profit. Basically, they want to be 70% all in. They want to be all in for 70% of the ARV. All right. Could you help that investor deploy $3 million? I just picked a number out of the hat.
Yes, I could. And we'd have to be patient with it because there's a lot of deals that you have to turn over in our market. A lot of competition here, but yes.
Okay. All right. So what would they do? Just give your office a call and say, "Hey, I got some money. Let's go to work."
Yes. My cell, 512-799-8001, or my
Say that
website
again.
address.
We had a little breakup. 512
799 8001.
Okay.
And then also my website, www.Tarek, which is TAREK, and then Morshed, MORSHED.com.
Did you have trouble getting that URL?
Shockingly not.
Yeah. All right. I was able to get rogerblankenship.com. And that's because I jumped on it early in the game, but I know of at least 50 other people named Roger Blankenship, and most of them are on Facebook, but
I'm shocked that you got that. That's crazy.
Yeah, I was a little surprised too, but anyway, all right. So investors can call you from out of town and deploy their money. Can you also connect out of town investors with the resources they're going to need for the rehabs? Contractors and people that can do it, right?
Yes.
All right. Now, how would you work that? In all fairness to you, you earn your commission on the buy side and the sell side, but that's not paying you to manage a construction project. Let's just say if it was me coming in from out of town, I would want some oversight on the thing. Do you have a structure set up where you can provide some kind of oversight on the projects to make sure that the jobs are being done correctly and contractors are staying on site?
I've actually just done that as a pro bono thing, where it's, hey, you want me to run by there every once in a while and just make sure things are chugging along as they should. No problem. Most of my clients, because they're getting connected in those situations with, quality GCs and such that are dependable, they don't necessarily need that. But that's how we've worked it is, hey, maybe I'm running by once every 2 weeks and just making sure everything's, chugging along the way it should. But if it gets big enough and there's enough requests, then yes, I'd have to actually kind of create a structure around it, which wouldn't be a huge deal.
Okay. Hey, we're right up on a break. Can you hang on for one more segment?
Yep.
All right. We'll be right back, folks.
Hi, I'm Stu Schuyler from Tampa, Florida, and I'm here and just attended Flipping America by Roger Blankenship. And this guy is awesome. I am excited. I am going to find a house in the next week or two, and I may even hire Roger to be my mentor. And I'm going to go make some money, and I'm going to have some residual income, and I'm going to stop working for a living, and I'm going to make my money work for me with the help of Roger. I urge everyone to attend this meeting. It's awesome. All I can say is Roger's a great guy. I wish he'd have been my dad, but I'm 20 years older than him, so that wasn't possible. Anyhow, I made a great friend here today, and we're going to keep on trucking, baby. God bless America, and God bless this company.
And we are back. He's Tarek, I'm Roger, and I teach people how to make money in real estate. And today we're making money in Austin, Texas. And now, when you talk about Austin, tell us a little bit, what's the size of Austin?
If you're talking city limits, about 2.4 million. If you take the suburbs and aggregate, you're about 3.4.
Okay, so it's a pretty good sized town.
Yeah,
There's
it's growing
opportunity.
out there, yes.
Okay. Now, what would you say is? Do you track really the real estate conditions across Texas, and do you see them syncing up in some way or correlated to Austin?
Not correlated to Austin, but Texas, most of the markets in Texas are very driven by job growth. And that is, a boon that Texas has cashed in on, truly. All your major metros, Dallas, Austin, Houston, and even San Antonio have had major job growth. Cost of living here is very low in any of those markets. The economic conditions are the business friendly environments. And then of course it's a no state income tax state. So that really has been very attractive to a lot of major companies, not just in Austin, but the other major metros too. So it's trended very well, and it's expected to trend very well in terms of economic stability and therefore the real estate growth in each of those markets.
Yeah.
Long term. Now, I do think that, for example, I believe we're closer to the peak of this current cycle in Austin than not. And I think that the other cities are some version of that too currently.
So, what do you think is going to happen over the next 12 months with the market in
I
terms
think
of retail sales?
Austin it's going to be a good market, but it won't see a ton of appreciation like it has in past years. And so I think it's going to be a little bit of a flat market, meaning below 600,000 we'll probably see 3 to 4% versus 8 to 10% appreciation as we did in past years. And then above 600, it's actually going to be flat or depreciating a little bit for this year and maybe even a portion of next year, and then the next upcycle starting. I think Houston's similar, and Dallas is doing a little bit better. I think Dallas is going to see some very good appreciation this year across all price bands, probably around 7 to 8%.
That's interesting. All right. Now, those of you that are regular listeners to the show will know that these numbers are pretty much in agreement with what the Flipping America research team has recently put out.
Really?
Except we don't have Dallas growing that much this year.
Yeah.
We really don't drill as far down into local areas as you have apparently, but we were seeing about a 5% growth over Texas for this year, a little bit ahead of inflation, but not like the 7 or 8% we've been seeing here lately. Yeah. We actually have Atlanta as being one of the leaders because they have the furthest to come back from. And we're thinking 7% or so in Atlanta this year before it begins to tail off in 2019. And but most of the rest of flyover country, as it's referred to, we're forecasting around a 5% growth.
Interesting. That's great to know. Appreciate you sharing that.
We're also, and I think I said this maybe on the last show. I can't even remember for sure, but we have been saying for a while that the coastal regions are due for a little bit of a comeback. Comeback to us price wise. We think we're going to see a little price reversal from Washington, D.C. to Boston and from really the entire West Coast. The markets there are overpriced and average people can't afford to buy a home. So sales are already slowing. Sales were actually down 3.2% nationwide in December. But that's because there's just not enough inventory out there and people are giving up. And so when sales slow down, prices come back, right?
Yep, absolutely.
So those coastal areas, we're not forecasting any kind of a deep recession or even certainly not a crash. And it's not even going to be a decline. It's going to be a slowing in the rate of increase.
Makes sense.
It is going to be pretty flat across all price points on those coastal areas I mentioned. That's what we're saying. And so it's good to know that somebody right there on the ground who pays attention to the numbers is agreeing with us. That's good. I'm glad to hear it.
Well, what's interesting also is part of the reason Austin is going to be a little flatter this year is because of affordability. We're not a coastal city, but our for example, prices have gone up 50% since 2011, but average household income has moved up only about 10%.
Right.
So we have a delta. So we're actually having some affordability issues, especially once you get above 600 and so on.
That is happening in a lot of places. We did a story back in December about the Worldwide Affordability Index, and it was a little concerning to see. And if you remind me later on, I could send you that study. But all right, so we've talked a little bit about the future. What do you see happening with rental properties? And you talked about getting into rentals yourself. Um, do you like single family rentals? Do you prefer apartments, multifamily? And what do you think about that?
I like both. I think that where I'm at and what I want to build and scale, I like multifamily better. And the reason why is when I'm looking at a couple of reasons. One, when I'm looking at what's going on with millennials and how they love to congregate and aggregate and be in situations where there's a lot of things happening all in one place. I think multifamily gives you a unique opportunity to do that and fill what's a generational desire that's different than past generations. And, and I think, having one single rental home, which is great, but having a package, whether it's a package of homes or a apartment building, gives you some economies of scale and ability to have things be off in some units, versus just one, and it gets tough. Very little room for error.
Yeah, it's tough to cash flow if you have one tenant out and that kills all the income from that unit. Yeah.
Yeah. So I think in today's world in investing, but also just kind of where society's going, I think the idea should be really try to build a portfolio of properties, whether it's a bunch of single families or, a complex.
Okay. Well, folks, we've been talking with Tarek Morshed today. And if you have questions for him, you could send them to me at questions@flippingamericanetwork.com. If you said radio, it'll still work. We still have that old URL. But questions@flippingamericanetwork.com, I'll forward them on to him. And if you have general questions about real estate and real estate investing, you could send them along as well. Tarek, we thank you so much for taking your time to be with us today and hope we can talk to you again very soon.
Hey, Roger, truly an absolute pleasure. Had a blast with you, and hope we brought some value to you and everybody.
Yes.
Hopefully everybody have a blessed day. Take care.
All right. We'll talk soon.
All right. See ya.